Hi, Bruce here from Voodoo Trading. Welcome to our weekly YouTube series where we walk you through the execution of our systematic rules-based trading strategy. Our goal with these videos is not to recommend trades, but rather highlight the thought process we go through to execute our trading strategy. To be successful, traders should not follow by recommendations of others, but rather develop their own personalized trading strategy that generates their own signals. You can get more info on how you can start building your own personalized trading strategy in the description section of this video. Okay, let's get started and review the new additions to our watch list this week. We'll also take a look at a position where a stop loss was hit, and at the end of the video we'll review the performance of our active trades. This table provides a summary of the markets that are currently on our watch list. The markets shown in red have been removed from our watch list this week, and the markets shown in green are new additions. As per our trading rule number 2, at the end of each trading day, we scan our market portfolio to identify markets that are approaching our buy criteria and add them to our watch list. It's encouraging to see our watch list expanding over the past few weeks, as our list was more or less empty for the last half of 2022. Hopefully that's an encouraging sign, and there will be significantly more profitable trading opportunities in 2023 than there was in 2022. As a rule-based trader, we don't try and predict where the markets are going to do. We simply systematically execute our trading rules. It is especially hard to execute our rules after being in a bear market for the past 12 months, and all the talking heads on TV are telling us there's a recession coming, and we can expect the bear market to continue. Nobody knows what the future will bring. We just need to put our head down and take the signals our trading system generates. One market, the sugar market, was removed from our watch list this week. We'll talk more about sugar later in the video. And this week our trading strategy has presented us with possible trade setups in the gold miners ETF, the materials index, in China, and also in copper. Let's take a quick look at the charts for these 4 new entries onto our watch list. In last week's video, we walked through how our trading strategy got us into gold bullion. That trade is profitable, as we'll discuss later in the video, and the strength in the gold market continues with the gold miners ETF joining our watch list. This ETF includes some of the biggest gold mining companies, including Newmont, Barrick, and Franco-Nevada. You can see in this chart that XGG has developed a nice round bottom and has started to trend up. We add it to our watch list because it closed above the 200-day moving average. The 200-day moving average is shown by the blue line on the chart. You can see that the 50-day moving average, which is shown by the red line, has not yet crossed the 200-day moving average to form a bullish golden cross. The purple dashed line in the chart shows a 6-month high of $19.10. For some traders, a break above this 6-month high could be the trigger to enter this trade. This trigger could be hit over the next week. Given the strength in gold, the gold miners, and copper, which we'll discuss in a bit, it is not surprising to see the XMA Cap Materials ETF join our watch list. This chart looks very similar to the gold miner chart we just looked at. Like XGG, XMA is closed above the 200-day moving average, but unlike XGD, the 50-day moving average has just crossed above the 200-day moving average and formed a bullish golden cross. For some traders, this would be the trigger to enter the trade, but we're waiting to see if XMA can break through some upcoming resistance before we enter the trade. You can see that the price is quickly approaching the 6-month high of $20.01, which is represented by the purple dashed line on the chart. Even if the price does break through this resistance level, there are higher resistant levels at $21.44 and $23.11 that could act as resistance, but also to be suitable entry points if the price breaks through those levels. China has been in the news over the past couple of weeks as it aggressively lifts many of the COVID lockdowns and restrictions that have been in place. We don't trade based on news events, but in this case the price action of the ZCH China Stock Market Index ETF closely aligns with what's happening in the real world. You can see from the chart that ZCH has closed above the 200-day moving average. We'll wait to see if the 50-day moving average crosses above the 200-day moving average, and if the price can clear the previous resistance level of $17.67. If that occurs, our trading strategy entry criteria may be triggered. The last market that was added to our watch list this week was copper. As you can see from the chart price action for the COPX ETF, It is very similar to the previous charts we have reviewed. The ETF broke above the 200-day moving average, and the 50-day moving average recently crossed above the 200-day. Depending on the entry rules for their trading strategy, some traders may have entered the copper trade based on the breakout above these two indicators. Our trading rules require that we wait for a breakout above a key resistance level before entering the trade. You can see from the purple line that copper is approaching a 6-month high of $40.42. We'll wait and see if our entry signal is triggered. Our trading strategy did not generate any new entry signals this week, but our stop-loss exit was hit on an active trade in sugar. We originally entered the trade when there was a breakout above the previous key resistance area. Our trading rule number 3 states that we'll enter the trade if there is a follow-through on the breakout. You can see on the chart that there was a continuation of the breakout, and we entered the trade at $9.74, which is highlighted by the blue box on the chart. Our trading rule number 4 states that we must know we will get out of the trade if we are wrong and the upward trend does not continue. As soon as we enter the trade, we place the $9.22 stop loss to protect our trading capital. Sure enough, as soon as we entered the trade, the trend reversed and we were stopped out of the trade. No problem, we expect to be stopped out in over 50% of our trades. We have now freed up capital to hunt for more profitable positions. Okay, let's take a look at our active trades. As you can see from this table, after being stopped out of our position in sugar, we are left with 5 active positions. The majority of these trades are in the commodity sector. We also have 1 emerging market position and 1 position in healthcare. We are currently about 50% invested. When we are out of the market, we park our money in a money market ETF or mutual fund. Our trading strategy currently has a 35% success rate, which is right on target. Please let us know if you have any questions or comments on today's video. If you found the information useful, please subscribe to our channel to get future updates. Thanks for watching, and we'll talk soon. Good luck and good trading.